Hello, everybody, and welcome to another episode of D-Rock's Trades. I'm your host, D-Rock. Thank you for tuning in today, and if this content has helped you in any way, please like and subscribe, and do not hesitate to drop any comments, questions, or concerns, as I always value feedback. So without any further ado, let's get right to it. All right. Hello, everybody. Welcome back. I wanted to kind of do a quick continuation of supply and demand that I did yesterday. And I'm going to make this one a bit more brief. We just had a pretty good example kind of show up today on my favorite ticker, SPX, that I wanted to kind of walk through and show. And it's kind of just going off of the video that I showed yesterday. So before we get into the actual chart of SPX, I wanted to kind of touch base on these real quick. How we have these basic patterns, the rally, base, drop, drop, base, rally, etc. These, when I drew these, it's just a very very straightforward block of liquidity happening here, consolidation. This does not always happen like this, as anybody who has been trading for a while can understand. What you might get sometimes, uh, and let's just kind of pop this one up here. What you might get sometimes is you're gonna get a rally base rally. However, you might end up with something a little bit more like this for your rally base rally, right? And what happens here, this might not be the greatest example, but instead of just a nice consolidation, you have a top of the range, bottom of the range, you end up with uh, a triangle of some sort. There's all kinds of different ones. This one here would just be literally a bull pennant, right? Here's your pole, and then here's your pennant, and then it breaks out. Well, the same can be the other way. You can have a bull pennant, however, it doesn't have to break out to the upside. It just means that when you have a bull pennant, it typically will break out to the upside, but it can also break to the downside, giving you a rally base drop. The base just happens to be lower highs and higher lows until we get to the apex of the triangle and it decides what it's going to do, right? So that's where you get a lot of these patterns, bull flags, bear pennants, bull pennants, all of those good things. Well, another one that we're going to get occasionally is going to be one of my favorite ones. And it's going to be something that looks a little more like this. You're going to get higher highs. Well, this is a head and shoulders right there, which you can see how this is the same thing, right? Rally base drop. It just happens to be a head and shoulders. This happens all the time. All the time. Head and shoulders are a great pattern, but that's not what I was going to show you here today. It might be easier for me to just draw a new one at this point, to be honest. But let's see here. Yeah, let's just draw a new one. That was that was not going to work out here. Okay, so price does a little bit one of these. So we're basing here, right? It rallied, and now we're going to base. But you see here, we're making higher highs and higher lows. Okay, until we get to a point, and it says we're doing this. And what we just created here, if I drew this anywhere near accurate, would hopefully be something along the lines of, and this does not look like it was a gray one, but some sort of a rising wedge. Okay. And if you want to do let's see, you want to do a descending wedge, it's the same thing where price comes down and then we get into this descending wedge and then it breaks out. It's the exact same thing, right? Rising wedge. Now, the thing with a rising wedge, though, is that you want these wedges, a rising wedge or a descending wedge, you want them to go into supply on a rising wedge, or a descending wedge, you want it to go into demand. And those are going to be the ones that are more powerful. because you're building liquidity. You're building liquidity. You tap supply, and then it rejects. Okay. So this is a very common pattern. This is a pattern that a lot of people trade. I love this pattern. I love to trade it. I love to see if I can catch it up here. It's a bit harder to catch up on the top here, but you can do it. Um, Typically speaking, more often people grab it right here on the break. They wait for that break and then grab it, or even they'll wait for this one wasn't the greatest here. They'll wait for a break, but then price will actually come back up and retest it before finally sending down. Which, if I had drawn it a little bit better, what this ends up being usually is just a head and shoulders, in a very awkward sense. I didn't draw it very well for that, but usually it ends up being a head and shoulders as well, right? So price breaks through, it starts showing you a fake out coming back up, but really it just kind of rejects right here and then breaks down even further. It doesn't always do this, but when it does, this is a great entry point right here, because your stop loss is really just going to be kind of inside this wedge. You could, depending on where it's at, you could even put your stop loss above the wedge, depending on your risk tolerance, and what you're trading exactly, and the time frame, and all of that good stuff. A lot of different variables there, but this is a good strategy that a lot of people take. I have played this a lot. I typically try to catch right up here when it's testing, when I see this pattern forming, and this gets into supply. That's what I try to get. But if I miss this, I will play the break. And then depending on what I'm trading, I'm usually scalping 0DTE SPX, to be honest. So I'm kind of getting out right here anyway, and I might actually re-enter if it does come up here to retest. But I'm getting out at some type of support, maybe demand. Sometimes what happens is you get somewhere in here, you might get some untested demand right here, right? Which didn't line up with my drawing perfectly, but I think you get the point. Let me get that there. So sometimes it'll actually end up looking like this. So when this breaks, I'm just taking a short ride right here real quick to demand. It hits demand, bounces up, comes back up here, retests the wedge, and then breaks down further past this small demand, clearing it, thereby making it kind of dead in the water, really. But let's get into the example I wanted to show you. Now, what I wanted to do is leave this up as is. This is my SPX chart. There's a lot of lines, but one of the healthy things to do sometimes, and I regrettably don't do it often enough. These are going to be the only ones that I actually really do care about. Let me see if I can just copy these, and I'm going to go ahead and remove all 56 drawings of my SPX, because sometimes it just feels good. It's nice to get some fresh eyes on it. And then I'm going to paste my JPM color. I do want to just kind of keep those up there. I'm not going to get into those right now. That's not this video. So we're just going into supply and demand, continuation from yesterday. And I'm looking at the daily chart right now, but what I'm going to need to do is flop right down here to the 30-minute. So this was the session today. No, I'm sorry, that was Friday. Let's see, when did it start? Right here today. This was the session. So from Friday here, what I saw, let's kind of do this ish somewhere right here. What I saw here, and I did delete it, so it's a little harder to see now, but I think it was something along these lines. This might have been the fake out. Let's see, what time was this? Oh yeah, this is basically, oh, this is all of Friday. Okay, so on Friday we had something like this being formed. Okay, this is technically a rising wedge. This wasn't the rising wedge I was looking to play, though. It's not formed well enough. And we have kind of a key level right here. We'll flag this. Let's go here. Okay, so let's start playing today's session. And we'll see what it's starting to do here. This might have actually been it. Let's go back. Yeah, I think we were starting to get that shake right here. Okay. So we were watching this and saw the rising wedge. We saw what looked to be a potential breakdown. But the key thing here, like I said, into the rising wedge, is you want it to have it to go into something, right? So we have here resistance, and this was, really kind of considered to be potential supply here for a hot minute. But on Friday, the opening candle, it came up here and grabbed it, came right up into it, and then it quickly cleared it out. So this supply was dead in the water. It's no more. Okay, so we didn't really rising wedge. We didn't make a rising wedge into this supply. We actually started the wedge kind of into it. So that doesn't count. So we're going to come back here. And we're going to look. We're going to look to see where are the market imbalances. Well, right here, this is what price does. Is it says, okay, we have an imbalance, and it checks it. It checks this imbalance and then keeps going down. So there was no imbalance here, but there was an imbalance right here. This is a market imbalance, right? And this is on the 30-minute. And so this was an imbalance. It looks like July 31st. And forgive me, I'm Mountain Time, so that's 12:30 p.m. Eastern Time. Was this particular candle, and this created a market imbalance because price got away. It took off. These candles, none of these candles right here ever came back up to test this level, this 6395.39 level, literally until today. Today was the first day it actually got tested. It came close on Friday. Let's see here. What's the high? The high is 6395.16. It came within a few pennies, but it didn't touch it. Okay. The whole point of this is that if this is a supply and there are orders waiting, those orders have particular limit orders. These are based on price. Okay. So if this is going to be a supply zone, you potentially have orders waiting to get filled here, waiting to get sold at very key levels. So when you're within just a couple cents away, that doesn't count. It needs to get in there. The price needs to get in there so those orders can get filled, right? So now what do we have? Well, now this rising wedge suddenly looks a little bit different, doesn't it? Okay, because now you have this supply zone on this 30-minute, and you can see a little bit of a volume shelf going on here too. But you have this supply zone. So when we have our session today, this is actually Friday, sorry. Let's see, it started right here. Okay, this was the first candle of the day. It came up here and it touched into supply. And then we kind of went up here and swept. And so then at that point is when I kind of noticed, like, okay, we have a rising wedge going on here, and we actually touched supply. And so this break right here, it was a little too early in the day. I just didn't feel comfortable with it. But this break could have been something that you play. But let's see what happens here. See what we did there is it broke. It immediately came back up immediately. And what did it do right where it rejected here? It filled the market imbalance. Okay. So for a whopping, however many minutes on this candle, there was a market imbalance right here at at 390.46. It was a market imbalance, but you see here, price came up, tested it. So this imbalance was no longer valid. It got cleared. We're good. And it also kind of closed kind of underneath this wedge, but this is not considered to be a breakdown retest. Don't get that confused because there was no breakdown. It really just came down and tested it, and it said, you know what, maybe we're just going to expand this a little bit here because that was not a breakdown. That doesn't count. And so you see, price then came up back into supply, back into supply. We still have our rising wedge happening here. Okay, we still have this built up. Now we're back into this supply zone. So now it's really looking interesting because we did come down, and instead of what looked to be a breakdown earlier, all I simply did was say, you know what, we're just going to move this trend because now we have two more touch points on it, potentially even a third if you really want to just get kind of in there, right? These are a little bit lenient in terms of that anyway. So now we have additional touch points instead of just the one that we were really going off, or the two. I'm sorry. We have our starting point. We had point B right here, point A, point B. Well, now we really have point B, C, and D, right? So now it's a little bit more stronger. And now we're back into supply here. And let's see what happens. And this candle here came up and cleared it. Okay, so now we have cleared over the supply right into, well, nothing really. Is this all-time high? It might be. Yeah, I think, yep, this is all-time high. Let me just go ahead and flag this, all right? So now prices come up and clear this. And what did it also do here? It came up and it tested the top of what we had going on here. So now we have a point A. I mean, you could even get it into there too. It gets a little funky like that, but we've got a point A, B, and C already. And now we have a point D. So we have multiple tests. This one here actually swept through it. So this is when I really started getting interested. And I said, okay, maybe this rising wedge, there is something to it. This right here is a little dangerous though, as we did clear this supply. I really prefer this to be kind of the touch of it, the kind of squeeze into supply. But now we cleared it. So I was kind of hesitant. I stayed off a little bit. But here, this candle proved everything to me, and it said, okay, yeah, we came up here, we rejected this. We're still in this rising wedge, but we're making a beeline. We're making a beeline for it. And if you look at the candle structure on the lower time frames here, you can kind of start to see it as well, right? We had a huge launch, huge stick, and then a pop over here, and then it starts really looking like, okay, now we are respecting the supply zone. We are respecting this rising wedge into it. And right here, this was my key giveaway. We had this 395.39 level. And remember, this was our market imbalance. Whoops. I'm sorry. Bouncing all over the place. Remember, this was our market imbalance right here. Okay. And yeah, we did touch it earlier today. So it was kind of cleared. But this was still a key level then. At that point, it was still, and it's still just kind of acting as a potential support resistance level. And when you're down here on the smaller time frame, which I do jump to when I'm scalping SPX, playing just kind of intraday trades, I am not I am not too good to be trading on the 5 or 10 minute on SPX. And when we came down here, it looked like clearly we were rejected. We started the base right here, rally, base, drop. Okay, going back to our training earlier, this is just simply a rally and a base. Let's try to get, there we go, and then a drop. Okay, and it just turns out that our base at this point was, it was not like as clean of a base as you see in that picture that I had, but it's still a base, right? We're consolidated and then we drop. We broke through this. Once we broke through this, My interest was really peaked, but right here is when the entry occurred. It's right here. Okay. Because price came down to the bottom now of the range again of this descending triangle, came back up here. We tested this imbalance zone and we rejected it. And then we can go back to the 30-minute here. Oops. And this isn't the cleanest of breaks, but it did break. Okay. This is a clear break right now. This candle really was kind of like the break candle, if you will, on the 30-minute. This is definitely a clear break. It wasn't the cleanest ones because of this chop. You know, we were kind of a low volume chop until, of course, here, which is the last 30 minutes um, of the day. So that's why you have that huge volume spike right there. But nonetheless, just a quick continuation of yesterday's supply and demand video, and how you can use supply to your advantage, even if you're trading other strategies. So this strategy really was simply the ascending wedge, which I might have called it descending earlier. I'm sorry. It's been a long day. But this really, all this was a chart pattern of a rising wedge. And a rising wedge by itself is not as powerful unless you're getting it into supply or resistance. In this case, it was definitely supply, and yeah, that was it. I wanted to kind of keep this one short since the other one was so long. Hopefully that helped. Let me know in the comments, and happy trading, guys.